Now it's like I'm expecting this candle to do something, this candle to take it, and then that's my trigger. Like it all happens within 2 candles, and I feel like not knowing that aspect of trading, like not being able to trade within 2 candles and take a portion out of it, like right there is your fault. Like you're just waiting to see, you know, something great, something that looks perfect, like unfold, and that's not the case. Like risk to rewards. So a little weird, but a lot of people I've talked to, they're like, oh yeah, it needs to be a 3-to-1, needs to be, you know, or I never looked at it like that. I was like, I need to just grab something out of the marketplace.
All right, folks, here we are on Trading Up. We've got Hunter in the house all the way over there in Connecticut, the USA. Welcome to the show, Hunter.
Thank you, Cam. How you doing tonight?
I'm good, mate. Well, look, you're an ICT trader. You've been doing it for 6 years. You work a day job and trade ICT at the same time.
Mm-hmm.
So I think a lot of people are going to be in that same situation. You're managing to like take part of your paycheck through your trading. So let's hear how you got into things to start off with, and even finding ICT. How did it all start? Folks, if you're looking for a prop firm at the moment and you want someone who's been around for ages, flexible, reliable, and has low profit targets, then check out my sponsors, Blue Guardian. So these guys, I've been trading with them for the last 8 months. They've been sponsoring the show for about that amount of time, and they even have guys on my live stream trading them as well. So what I've found is their commission seems to be lower than some of the competitors out there. So really great trading environment, and they offer now C-Trader and some other fantastic trading platforms as well. If you want to check them out, there's a coupon code in the description, or just use it, Trading Nut, all one word, and get 10% off at checkout. There's a QR code you can grab here as well. All right, folks, let's get on with the show.
Twitter was pretty helpful. It put me in connections with this one kid. His name was Trevor. He told me, he was like, have you ever heard of this guy? And I was like, who? And he's like, Michael Huddleston. He's like, ICT. And I was like, no, I've never heard, send me some stuff. Maybe I'll check it out. He sent me, at the time, it was pretty cool. He actually sent me the private mentorship because he was in it. He sent me his videos, and I never even watched them. I was like, yeah, no, this is so much stuff. Like, screw this. Like, at the time, I was a very visual trader. I wanted to see everything. I wanted to see lines crossing. I wanted it to be easy. And when I started looking at his videos, I was like, that's not easy. But then it kind of hit me. I was like maturing at the same time too. I was like, this isn't going to be easy. Right. Too many people would do it. Like, you're telling family members, friends, this is what I'm doing. And it's kind of like, all right, like, he's trying to do this. It was a lot more complicated than I'd imagined. But yes, I went through all the stuff, and then I just kind of fell in love with like his way of teaching. It wasn't flashy. There was no, this is what I have. Look at all this stuff behind me. There was, no pop-ups in the videos. It was just like him on a chart. And I was like, this is like what I need. Like, let's sit down on the chart. Let's look at this and go through it. So, like I said, that was 2 years after I started trading. So I've been ICT with ICT for like 4.5 years now. I'm going on my 5th year with ICT. So that's been pretty cool in itself. Like I said, I like really dug into his content, got on his YouTube, went balls to the walls with it. The private mentorship that helped, and like I said, I just took notes and went over and over again, and it actually just kind of like shaped my like vision towards the markets, rather than gave me something to trade with, right? Because I tried a lot of stuff like most ICT traders do, and I was kind of failing with it. But I kind of had to take a step back and realize, like, he's not showing you, what model to use or this. He's showing you how to just read a market, how to just just watch it unfold, what to anticipate, where it should be going to, what it should be leaving from, So that's kind of like how I got into it, the little progression line, kind of how I got to where I was as like an ICT trader.
Okay, so it was the private mentorship versus the the free one that's now on YouTube. So
Yep.
You were sort of like in the thick of it. I know there's a lot of content because I've had a few other guests on before where that the actual amount of content to get through to get the nuggets is extraordinary. I mean,
Wow.
how did you sort of collate the information that you thought was going to be relevant for your style, or just relevant in general?
I started off by just like writing down everything, and I have it's actually pretty big. It's hardcover. There's like thousands of pages in it. I took a ton of notes. Like, I was recording stuff that really didn't matter. Like, to me, to be honest, there's a lot of ICT information that's very saturated. It kind of repeats. I think the biggest thing with him is like understanding when he's talking about time, really watch, and just kind of just watching his live streams. So I learned more in his live streams when he was doing them all last year and stuff than I actually did watching his older stuff. Because, when you're watching it live, you're actually seeing a little bit of emotion. Like, when he's talking about it, like, I wasn't the one who was sitting there being like, oh yeah, like let's wait for him to point out, a gap or something in the market. I was sitting there and I'm listening, like, when does his voice change? When does it, like, what kind of anticipates, like, he's looking at the market and something's about to happen? Because he does have a deeper, at least I believe so, he's a deeper understanding than most people will ever get to. I don't know what to extent that is, but you could just tell, like, the guy knows his stuff. He's earned his reputation. He's out there.
So when you're like listening for these, changes in tone and stuff in his voice, I mean, what was there any particular time that you sort of thought, oh man, and this happened when when his voice changed, or anything like that, that you sort of like, oh man, this is like I picked it, or I could see it coming as well, or something like that.
Yeah, so it's actually like he talks a lot, right? I think everyone knows him. Like when he's in his videos, he'll kind of get carried around and start talking. Like he'll have a chart open and he'll start talking about, he's just going over like this gap printed this morning, talking about everything. And then out of nowhere, like you'll see him kind of like go right back to like live price. And like that initial jump right there, you could hear it. Like he'd be like, all right, guys. And then we're actually gonna and you could tell it's like, all right, something just happened, some sort of switch, like something just triggered him, right? And then you see him actually start tracking live price again. So like I was watching those, kind of recording like the times it was going down at. And I think like the biggest thing I saw was like when you go back and look at a chart, you see, engulfing candles, like displacement stuff. But when he was actually sitting there like reading through price, when like you would see a displacement candle coming, like that's what took his attention to. Like it's like he like was already anticipating, I'm looking for a change. And when a real displacement candle came, if depending like how low of a time frame you guys can have in your chart. So I have like Trading Views, like best package or whatever. So I get a 15-second chart, 5-second chart. You actually see like when those candles open, they just flicker down. They don't actually like slowly keep pushing down. Ends up being an engulfing candle. It's literally in microseconds, just like boom, just floods open. So when like those types of little like ticks happen in the algorithm, like that's what was catching his attention. Him like kind of like being like, all right, let's see what's unfolding now. Like I said, then he's waiting for a gap. He's waiting for one of his entry models to take advantage of it.
And I suppose that's possibly even like stuff that you're not going to see on a retrospective look at. Let's look at the chart, is the time that candle took to form, and even like playing it through on a back test. Whereas I suppose that's kind of the insider information almost. Like if a candle's just rapidly formed and had gone 4 or 5 pips in the direction that you want it to go, and that he's like going, okay, well, there's definitely a hole there in that market that needs to be filled. There's liquidity there that needs to be grabbed at some point. So that's really interesting. Now, so how did you piece together, like with all the stuff, I suppose the model that you're trading now?
Yeah, so it's actually funny. So like I was going through and I was looking at like ICT's breaker, his fair value gaps. Like I was like, I want to build a model out of it. But to be honest, dude, like I tried so many times to be like, yeah, I'm gonna look for a run on liquidity and then a fair value gap. Like, just like the common ICT trade. Like I want to look for a breaker, and then there's the markets are so fractal that like without any timing aspect behind it, you're not gonna get the ICT entry where it's a perfect couple touches off a breaker and then it takes off. Like a lot of us are getting in these breakers and end up failing, right? Like, even myself included. So I was like, I need to kind of take a step back and look at what has he brought my attention to that kind of just like shows me something that I've seen repeat, right? So I was looking at it and I was like, all right, it all started when I started seeing this very common characteristic. I would see a PM session create a higher low of the day, preferably a higher low of the day, and kind of pull off that. The next day, all night during London, it would just sit like very still, stagnant. And then right around 8:30 was kind of like the trigger. I would notice that's when it would start kind of pushing. It would start darting for that high. And as soon as it would take it, it would like spend a very little amount of time up there, and then it just dumps and it shoots right down for the London low. So it like I was looking at it and I was like dissected it a little bit, and I was like, it's funny because it creates a very important characteristic from the previous day PM session. It creates a very important characteristic from the London session, and when it's ready to go, it all unfolds so fast that like if you're not anticipating it to happen, you're not going to get a part of it, right? So I started seeing that, and I was looking at it, and I was like, all right, why is it unfolding like this between 2 days? And like I started just looking at like two candles together. And I actually do have a really close buddy who I still trade with. And he's kind of been with me, and we've been dissecting this kind of idea together. But it's actually looking at price between two candles. And that's actually the part I was missing all along during ICT. It was like I was letting the visuals like lead me down like this death trap, right? All the time. Now it's like I'm expecting this candle to do something, this candle to take it, and then that's my trigger. Like it all happens within two candles. And I feel like not knowing that aspect of trading, like not being able to trade within two candles and take a portion out of it, like right there is your fault. Like you're just waiting to see, something great, something that looks perfect, like unfold, and that's not the case. And
I'm
I
not
was
too
still
sure
going
if I
through.
follow you there. So like, is it kind of like just anticipating what the move's going to be when you see these two candles, or is it anticipating what these two candles will be based
So
on something else?
it's seeing the first candle, and based off the first candle where you're starting with, the next candle you already know the direction you're looking to trade in. Okay.
Right.
So
Okay. Right. So see that setup candle, kind of like,
exactly, you'll see like
right. Yeah.
um I could like show on there, and it's all over my Twitter too, but you actually see like the first candle will engineer just a high, and then the second candle is the one that will take it and then flip. And then there's like trigger points to it that I've noticed too. Like when I'm going through this, something that caught my eye with ICT, and this is why I was like, all right, something else is up, because I've always said like ICT is not a visual trader. Like he knows a little more of time and price than like people think, and like it creates the same visuals over and over again. That's why we could see it, and he put the language behind it. But there's internals moving like the market, obviously. So I've always had that drive of like thinking like that. So I'm like, I need to chase like how he got to that point. And he posted a short. It was he went short one day on NASDAQ, and it was a breaker, but the thing was like the breaker never even completed yet. It was when a news release happened. So you had a high, a low, a higher high. And as soon as the news release happened and it started trading lower, he got in off the breaker, and it never even traded below the breaker yet. So I was like, this is just showing you how it's like time and price, and it's not time and image. Like he didn't need it to retrace right back up and sit there a little bit. Like he just needed to cross that one price, and that's like his trigger. That's like boom, it's ready to go. It's gonna start moving. This is his entry. And then something else I've noticed myself too is like I think one of the hardest aspects with trading is time duration. So it's like you could take the same setup, change how long it takes, and it's going to look completely different each time, right? So, and that's what makes it hard. So it's like you take a breaker model, right? One of them could unfold in 20 minutes, and the same exact one could take 3 hours to unfold, and it makes the image look completely different just because of the speed of it. So like that speed and time aspect alone is kind of tough to track. So, but that's kind of like why I went between. I was like, I need to narrow down how long I'm looking for. Like I was trying to look for this like long strung out like pattern, and like I was like, that's not it. Like these candles it's weird. Like I've said this to some kids I like talk to and kind of mentor a little bit, but it's one of my favorite things to say in the market. If you take away the time frame, you have no clue what chart you're looking at, right? Like you can't tell a difference between a 1 minute chart and a 60-minute chart if they're both blown up and looking the same. Like there's no way to actually. You could look at the prices, how much it ran, and be like, this is a higher time frame chart, obviously, but nothing there signals to you. So I said, think about that and think about how fractal the market is, that you could go to random timeframes now. It doesn't have to be 5, 15, 30, like the very cliche, normal timeframes. It could be a 36-minute, a 41-minute. And I'm not saying there's any like secrets there, but you go on all those timeframes and it's still showing you the exact same image. You can't tell them apart, right? So I was like, I need to look like a little closer between these. And I was like, I just pulled all my favorite ICT concepts, and I was like, I need to think of this now as a fractal. Like this, like what I'm doing, my best days, right? So my best days when I was going through as an ICT trader was a run on previous days, high or low, and then you're looking to go opposite way, right? A run on liquidity and it goes. I was like, I need to bring that now into a fractal concept, because those are my most profitable days, but I'm losing all my capital between, you know, the next time it forms like that, which it was keeping me from being profitable. So I was like, all right, let me see what I could do with this. And I took that fractal concept and really just jammed it in there with like runs on liquidity. And I was like, all right, this makes sense. And like, honestly, to me, it's like ICT never even mentioned to look at price between two candles, but every concept he talks about is sitting right there between the two. There's a power of three concept, accumulation, manipulation, distribution. Like all of his concepts are kind of like laid between two candles. It's like one's telling the story, the other's going to give you the opportunity. That's how I've just been looking at price and got myself to, with my buddy Fusco as well. He's been there with me for that.
Hey folks, what a view behind me. I'm at BLACKBULL Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at BLACKBULL Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at BLACKBULL Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. And to like, I suppose, establish your model as something that you're going to go forward with and lock in, did you backtest it thoroughly, and to what extent, if so?
Yes. So honestly, I did. It's very easy to backtest. You could see it all over the place, but you know, I kind of don't like, I don't want to say I don't love backtesting, but I've always found like when you're backtesting, you're looking for what you want to see, right? So like you're always your eyes just gonna naturally go to it. You want a fair value gap, you're gonna avoid a whole day's worth of data just to see the fair value gap, you know, the day before or something. So to me, I was like, that's not an accurate way just to get to see if this is reliable to trust. So I did a lot of forward testing, and I spent like months. And the good part about this is when you're looking at markets like a fractal, you just have to train yourself to be able to see it. You don't have to take every single one of them. So I was on these lower time frames watching it and just being like, okay, I think that's it. And then watching actually like move in my favor. And that as well brought me closer to profitability because I was seeing more of it repeat and getting like validation that like, okay, this is actually like a little ongoing tick in like the algorithm, and I could, you know, pull profits off of this. Like I could take a little bit. So I mean, that as well kind of helped me getting there as well.
Yeah, it's interesting. That's interesting that you did the forward testing over the back testing. I mean, I hear what you're saying around, like, if you're looking for a fair value gap, you might miss all the fair value gaps that you would have taken in the live market because they didn't actually work out, and you just don't see them for whatever reason in the back test. And the ones that worked, you see. But the live testing, or even just sitting there and watching it and going, I mean, it does instill that confidence, right? It does give you that confidence, kind of similar to a back test, but you're going, well, I could have made money there, I could have made money there. And I suppose after a certain period of time, you go, well, I kind of would have been up like, 20R at this point. Now I can start to think about placing trades. I mean, how did that first sort of foray, when you felt you had something go, I mean, what was that like for you?
You know, it was like I went through a string of like a lot of losses, to the point where I was like, all right, I need to actually stop trading and just start like watching and like knowing a little more than I currently do, because clearly it wasn't working, right? I wasn't gonna just sit on a downward spiral and keep taking losses just because I want to trade or have to trade. So like I said, I was just watching the markets, and just watching it alone kind of took a lot of the emotion out of it. And like I said, I really just would anytime I get a chance, like I'll kind of like avoid going on social medias and stuff, and I'll just hop on TradingView, and I'll just sit there and I'll wait, and like I'll watch like a 15-minute. That's like one of my scalping time frames. It starts on a 15-minute, and there's a lot of setups that will happen within a day on a 15-minute chart. And if there wasn't one currently happening on a 15, I would drop into a 1 minute and I would see it in there because it literally happens all the time. Any turning point, there's like the setup embedded right there. But you know, I don't want to say like I catch turning points in the market. It's not like that. Like I don't really even hold these trades long. It's more so a tick where like I look at this is actually another part that goes with how like I kind of got closer to profitability and stuff along the way. But it was realizing that like the visuals of the trade should not be guiding the trade. So you shouldn't be looking to the visuals in like risk to rewards. So little weird, but a lot of people I've talked to, they're like, oh yeah, it needs to be a 3-to-1, needs to be, you know, or however, whatever it needs to be. Like, I never looked at it like that. I was like, I need to just grab something out of the marketplace. And ICT tweeted one time, and this actually really stuck with me. It was, he said, find a mud hole and stomp it dry. And I was like, all right, that's different. And I was like, he's pretty much saying, find something small and just go in there and keep abusing it. And, you know, at first I was like, well, it's not smart to do that when, you know, you got a 20 handle stop and you're looking to take 5 handles out of the market. Like he was kind of preaching, like 5 handles a day or whatever. So I kind of had to put a little bit of the spin to it and be like, all right, how can I just go and make it make sense to like how I'm going to trade? So the next part is like kind of what I like. So me and my buddy who I've been trading with, we actually said it makes sense to use like a average candlestick range as a target. So if you're on a 60-minute chart, right, over the course of 60 minutes, you might expect like the NASDAQ to move at least, you know, 35, 40 handles, right? Whereas a daily chart, you kind of expect it to move 200 handles. Okay. So what we did, we were like, all right, let's just go in there and, you know, say one of the ones I use commonly, it starts on a 60-minute chart. I think of a 60-minute chart as like a daily chart. Imagine that. So the previous candle is considered like your previous day almost. And basically we'd wait for it to trip the previous candle's engineer liquidity and then carve 20 handles off that opening price. Right. And we said this is a good target because it's 20 handles is like the minimum a 60-minute candle should run. So we're just taking like a fraction out of that. Just grab a portion. And then, you know, if you got a good entry, throw your stop loss to break even. If, you know, it wants to run 100 handles or so, or you got a great entry, you got it. But that's not like the goal was always grab, you know, extract 20 handles here, take another 20 off here. And that's how we look to like attack the markets. It's like, you know, on a 15-minute time frame, we're not going for 20 handles. We're going for less because a 15-minute candle's obviously going to run, you know, a smaller distance in 15 minutes than a 60 would. So,
okay, that's interesting. So you sort of like, if you looked at your actual risk to reward, what would you say would be like on average?
Yeah. So I have a diagram. I don't know if there's like screen sharing for me to show it, but basically it could vary anywhere from probably like a 1 to 2 to like a 1 to 6 to probably to a 1 to 12. And like I said, the whole point of it wasn't for like risk to reward, but it just so happens that like where you're looking to enter and how basically like what I'm trying to say here is if I'm looking for 20 handles off a 60 minutes opening price and I get an entry that's 5 handles below, that right there is going to add another 3 or 4 R to my trade, you know? So it's like, I'm not going there saying I'm looking for a fixed 1 to 3. I'm saying I need to get my entry before that opening price. If I get a great entry and ends up running, that's adding a lot more.
I kind of get you now. So like, say you got a bull candle that's just closed in the hourly, and price spikes up above, you know, the bull candle X number of handles. You get in and it drops. Now you've got the whole bull candle to fill, and if you got in at a good price, you're going to be getting much more profit than if you got in, like, say, halfway down that bull candle, which you may not even enter at that point. And then you're like going, well, I'm just going to take what it gives me, kind of thing. Okay, I get it. That makes sense. Oh, that's a nice way to look at it. Okay, so when you place that sort of first live trade with all this sort of knowledge, how did it go? Was it a winner out the gate, or were you just like going, oh, damn, it was another loss? It was just one of those losses.
Yeah, so it actually was a winner out the gate. I have a screenshot of it. I think I posted on Twitter as well. I'll tell you this, when it works out and you're on side and it's right, it rips. Like there's no hesitation for it. It wants to go because you're pretty much entering where it's tripping liquidity. It doesn't want to spend a lot of time down there. So when you get in and you're right, it's on side, it's going to take off. Now, yeah, there's times where it'll spend a little while. Certain days where you're not going to see much movement, so it's very back and forth. It's definitely so profitable, but there have been times where you know, I'll get in the market, I'll get an entry, I'll kind of retrace on me a little bit, even get stopped out. Nothing's ever perfect. You're going to take losses on it. The point in the end of this is it's higher probability because you're just pulling a portion out of that candle rather than being like, here's a 60-minute objective, all the way, 100 handles above price. I'm going to get in on this, minute one candle. Like I'm on a 15-second chart trading a 60-minute candle. So you could take say I'm using an order block like to get in on a 15-second chart. That's a very small, very small little fractal in price for what could unfold off a 60-minute chart. So kind of see how they kind of like correspond right in there. But yeah, the first trade I took, it was a winner out the gate. It just absolutely ripped, and I was like, wow. I was like, it's cool because like I anticipated that whole thing. I forward tested up to it, and it just happened in front of my. It's like it was a different type of win because it was like there was confidence behind that win. There was anticipation behind that win. It wasn't, I hope this gap works. It wasn't, I hope this is the low of the day or the trend. It was like it's gonna hit that point and turn. And you know what's crazy? Like it didn't even end up being a successful, overall. Like I wasn't on the right side of the market for the day. Nothing. It just did exactly what I anticipated. Ran like 60. It was like mid 60 handles, and I just carved 20 out and got out. And I was like, it felt good. Like it was quick. It was, like I said, anticipated. Everything was there. There's a trigger when to start looking for the entry, and then there's an area you have to get in, before it gets there. If not, you got to let it pass. So there's structure and rules behind it.
And so in terms of like placing your stop loss, which I could see being quite important, I mean, how do you base that? Is it kind of the same philosophy, i.e. base it off a number of handles of the average higher time frame?
No,
candle?
so that's kind of why it differs. So when I'm looking, like the times I've studied it, and even still when I go through it, when I try and teach people how I'm looking at it, when you have that first candle that creates a high or a low, so we'll say a high for this example, when you see that next candle take it, that's your trigger, right? You want to see a quick movement away from it. You're not trying to see it hang around there for a long time and stuff. So when I'm getting in and I'm on those 15-second time frames, I'm going to use the ICT structure, the language, what he provided to look for my entry. Now I'm flexible with it. I have kind of like a theory that we've worked on in the past, shared on Twitter. It's with like timed order blocks, just like a simple theory that certain minutes of duration have a higher probability of working out as an order block and actually like being successful. It's nothing like too crazy. It's not this wasn't ICT's talking. This is just like looking over. We found a lot of candles like becoming an order block that were at this
right, second of the or the sort of right. So within like
right.
5 minutes or 10 minutes of the start of the hour or kind of thing. Yeah,
exactly.
yeah.
Yep.
Right.
And like I said, so they're quick turning points. Like when it's correct, it's a very quick turning point. So that being said, like I'll use, if it prints a gap, I'll use the gap. There's always going to be a breaker there, and that's going to be laying like right at the opening price. So if you think about it, you have the first candle created a high, came down to its closing price. Next candle opens, takes that high. That right there just created a breaker. And actually, like ICT's teachings, like when I was looking at them, and he was showing like a breaker. It's funny because like a lot of people will post that it's like a line chart, and it just shows a higher high, takes it down, a breaker. And whenever I see it, I'm like, that's two candles just smushed next to each other. That's not, a whole series of candles that created this, great picture that everyone thinks. I was like, that's two candles right next to each other.
I see what you mean now with the two candles. Yeah, okay, right, gotcha.
Right.
All right. So okay, so how did you take this sort of like this model into like grazing capital and stuff? You obviously just sort of come out of school and you're getting a job, so you're probably not going to have to be like flush with capital. How did all that play out?
Yeah, so I've always like worked and stuff. I always had a decent amount of money just from working and trying to save and everything. I was like I said, I was with a couple of prop firms, didn't have good success. One of them ended up just kind of scamming me on pulling money out of the market in terms of like payouts. And other companies, I found that they were just kind of like skewing with entries, kind of like manipulating your book a little bit. But one of the biggest things I think is like people don't really know when they're going through with prop firms, like what they're getting into. Like, a simple like running the numbers talk is like if you have $100,000 account just for easy numbers, and they want you to make the last prop firm I used. It was a $3,000 trailing threshold, and I think it was a $6,000 profit. And you're on a $100,000 account. Now it's like, to most people, they're like, oh yeah, that's 6%. And then I'm there, and it's 6% is really not that much. Now look at it in terms of what you're actually being allowed to lose. You have to make over 100% of what they're allowing you to lose. So you're not making 6% of the account, you're making 200% to hit that target, right? So they're right off the gate enticing you like, hey, over leverage, because we know you're going to leverage your account based off $100,000 and not $3,000. So that aspect right there wasn't there. And I was like, I could get $100,000 account for $60. Discount codes and all that, nonsense. Like I was like, I could get all that, or I could just throw $3,000 in a live account, and that is the exact same as that $100,000 account. I was like, now when the payouts come, yeah, they might be more, but me as a trader, like knowing that information now, I'm like, I'm not going to use my risk as if it was $100,000 account, because it's not, right? Like I'm not going to blow what I've got. So I was like, it makes more sense, if anything, just throw $3,000 in a live account and just see compound growth, and it'll just help you grow as a trader. There's no restrictions, there's no rules, there's no time elements behind it. Like, not only do you have to grow at 200%, but they're like, yeah, do it in 30 days. It's like, okay, like, that's not really, you can
Back
go
in the
look
day,
at.
I think now it's a bit looser with, it is looser with unlimited time, but yeah,
I
it was
have
tough.
seen a lot of them do that with unlimited time, which it's a good thing. No one should have to hit certain targets within a time interval. It kind of just forces you to want to go out there every day and edge off at that. So it's like, I don't know. For me, prop firms just weren't that successful. So I just took 10,000 of my own capital that I had from working and stuff, and I was actually able to put it in the AMP futures account. And over the years, I've just been slowly just growing and just seeing compound growth. And like I said, it actually, I like it better, because it's like you're seeing how the numbers like multiply over time, and how like your 1% when it started off is no longer that same number. You're seeing growth, and the times I did get on a live prop firm account, there wouldn't really be growth. Like you're kind of taking your withdrawal and then you're like reset back there. Like it's good in terms of getting the capital to go live and do that. I would agree with that 100%. But like as trying to be a long-term trader, I just don't see it. That's just me personally. I just don't see eye to eye with like prop firms like that. I think it implements a little too much.
And now you've got a day job, which is I do interview the odd trader who has a day job, so it's always good to see, because there's a lot of people out there listening who do aren't trading for a living, because they're obviously trying on the journey. How do you balance that with working full time and trading? How does that sort of fit into your I suppose work-life balance / routine?
Yes, I mean it was a grind when I first started. At the time when I left college to kind of like pursue a little more trading, I was like, all right, I still got to work. I'm leaving school. I don't want to just have to rely on the markets. So I wanted a little bit of a safety net, and also something just to pay the bills while I was, trying to grow and find my way in it. So at the time, I was working for a masonry company doing all stonework, just all construction, and I was trading the London session. So I would be up, like my schedule was horrible. I'd be up at like 12:45, going into like 1 a.m. I would trade the London session till like 4, go to sleep for 2 hours, wake up, go do my construction job, come home, take like a long nap, wake up, eat dinner, and just kind of like chill out, rest, see if I could go back to sleep again and do the same thing. And that went on for like a year. And then finally I was like, all right, I got to stop this, because like it's not working out. Like that's a very busy, quick life. I feel like it was the routine was not fun. So now I have a different job. I work 7 to 3:30. I like everyone there. It's a very stress-free job, a lot of flexibility where I could watch the charts and do my thing. So like I said, I come home from work 3:30, usually around 4:30 I'll hop on a Zoom with one of my buddies I trade with. We'll kind of go over the day, anything we missed, just overall, just look at the chart, what happened, and then we'll start marking up tomorrow and getting ready. And basically, like I said, what I'll do is I'll get some pretty much just some points where I'm like, okay, this is where I could see a potential daily high. This is where I could see a potential daily low. And then I'm working within those into that trading session the next day. So like I'll get to work 8:30, usually right around like 8:15. I'll stop, have some coffee at work, like take a break in the morning, and kind of just start easing into that 8:30, the pretty much the open, I guess you will, for like future traders when they kind of start their morning. So yeah, I'll kind of trade right around then. If there's no setup, probably by like 8:45, I'll hop off, and then I'll come back for like 9:30, watch the 9:30 open, and then usually like that 9:50, and like you'll even see ICT trade a lot in this window. It's like 9:45 to like 10, probably like 40. Like right in that window of time is the bulk of his entries for the day, like on his intraday trades. So that's kind of like the main window I'm looking in. And then if there's nothing in there by like 10:15, 10:30, for the most part, I'll just hop off and I'll wait, check back the PM session for like 2. But yeah, like I said, it's like the model I have, I'll be looking between 9 and 10 for I guess like a bigger fractal of that model, if you will. And then if there's nothing there, I'll hop on a minute 15. I can usually carve out, 10 handles pretty good.
And so how do you like, just so the guys who are working go, how on earth does he do it? I mean, how do you do it? So like, does your boss let you trade, or what is it? What kind of job are you doing?
Yep. Yeah. So I'll bring a laptop with me right to work, and then just pop it open here and there throughout the day, kind of glance over at it. And, like I said, I could literally take 2 minutes, 3 minutes. And I know what time, like I'm kind of looking at it to look at the chart, and I'll know within a few minutes, like, all right, there's nothing right here. I'll just wait till the next hour kind of unfolds, and I'll look right the last like 5-6 minutes of the hour, and I'll be able to kind of tell, like, all right, this is giving me something to work with.
Okay.
So like,
so
yeah, I don't need. Sorry about that. What was that?
I was going to say there's no there's no need for alerts or anything. You couldn't save a bit of time with alerts on TradingView to go, oh, okay, this thing's setting up now, or is it more dynamic?
Yeah, no.
Alerts don't really work.
So you can't really do an alert on it because you kind of actually have to see how it engineers a high. Like, so for me, it starts off on a 60-minute chart, so I have to see how that 60-minute candle is about to close, how it engineered the high, and then I mean from there. I could put an alert, but I've actually found, like, with a 60-minute fractal on it, it likes to take that high within the first like 13, 14 minutes of that hour. So it's like I said, it's a very small window of time where I actually have to look at the market. And then if it takes it, I know I'm in business. So I mean, I could set an alert there, but like I said, with the flexibility at my job, I don't really need to. I'll just watch it kind of unfold and do its thing.
And do you have sort of like plans, obviously, without hopefully nobody watching from your employment this episode, but do you have any plans to sort of like, I suppose go full time with your trading? And is there a threshold that you're sort of like going, okay, well, if I pass this, then there's kind of no point in me going to work?
Yeah. So I've kind of said, for me to quit my job, I want to be making, pretty much my weekly paycheck, like almost not every day, because I don't want to be like that, but pretty much when I'm trading, when I'm on the chart, I'm consistently making at least my daily paycheck off a trade. So that's what I have to base off. And now that's like, it's a goal for down the road. Obviously working towards it, but I want that safety net where it's like, okay, if I have a bad week, I know what I make, I know what I could do off a trade. That'll be right back. And then, like I said, it takes one trade, and that's what I made in 40 hours, elsewhere for someone else.
And it's kind of like what I get with a lot of guesses. They have this big, massive payout, which triggers everything. I mean, have you had any of those where you've like gone and made a certain amount of money where you're like going, this kind of is like just ridiculous for what I normally would expect? Or has it all been kind of moderate, steady? You're not that the money isn't that big.
When I was with prop firms, I did a it was off my face too. I had a 32K day, and like looking back, like that would never, like I couldn't do that again like that. Like I wasn't up to speed. I wasn't really thinking straight, but I was down. I needed like a 12% target. It was a 200K account, and I was down like 6%. And I was like, all right, I was like, realistically, I was like, I can only lose 8. I'm going to, take this last 2%, put on a trade. And it was like, I remember getting it. It was like the weirdest time of the day. Like I was watching this area being like, all right, I'm going to get in here when it hits. It ended up hitting it like 2 hours after the market opened. So like it was like 8 p.m. Eastern time. So I was like, I had never traded right now, but like, screw it. Like, let's, see it. Got in and it just like wicked right up. And that ended up being like a low of the day. And it just absolutely took off the next day. And I was like, oh my God, like, so I'm going to pass this account from it. And that was the first live account I ever passed. It was a 200K account through MFF at the time when they were still up. So, yeah, I mean,
Okay.
other than that,
So
like,
what? Yeah.
My profits now, they're relatively consistent. Probably anywhere from like 150 to 380. Sometimes you could see, a better profit, but for the most part, that's the bulk of it right now.
So if somebody was like going into, ICT as you did, what would be your recommended course of action, knowing what you know now?
Yeah, I would say definitely go through all of his videos, like take the notes, like he preaches that as well. I would say when you're going through his stuff, don't feel like you have to know everything. Take it more as this is going to take me a while to get through, and it's all just a way to shape you and kind of learn how to understand how this market and how the algorithm's booking. Like I said, it's a language. So he's not teaching you, this strategy. He's teaching you these are the components these are the internals moving. This is how I'm going to put a language behind it so you could see, what I'm talking about. Like he said, you go and you say, yeah, look at the breaker. I could point exactly to what candle you're talking about. Same thing with a gap. Same thing with an order block. Like really was just a language and a way of analyzing the market. And I would say keep that in your pocket, and the things you like from ICT, take them out and bring them together. And then, like I said, understand like the fractality of the market. Understand that like this happens all across the board, every time frame, and it'll just help you kind of like see what he's talking about a little more. Times of the day, using sessions as liquidity. You'll, like I said, it's something you just gotta study and put the time in for. I mean, that's realistically, that's it. I would go through all of his YouTube content, and that really is enough. Like his private mentorship stuff I got back in 2019, I think it was. That wasn't like there was no hidden gems in there that he never talked about ever again. It kind of was the same, kind of like saturated stuff he preaches and kind of talks about. So yeah, I would go on the YouTube. And like I said, always have a chart open too. Like whenever I was on his YouTube videos, I had a chart open. As soon as he would say something, I would stop it, go find it in the chart, find the last time I saw it. Like that was huge. I wasn't just letting it go in one ear, out the other, being like, all right, yeah, I get that concept. I was actually like, all right, let me go find it. And then as soon as I found it, it was a screenshot. It was save as a file, like keep it there and just keep it organized. And you'll start to see things in itself, like on your own.
Now, what about like sort of mindset? We haven't really touched on that, but I'm guessing there was obviously some hurdles that A, helped you get to the point where you are now, and B, helped you maintain it. I mean, have you got any sort of like things that you did or like things that helped you?
Yes, I mean, stop trading was a good one. There was, like I said, there were times where I'd go on losing streaks, and like everyone knows how it goes with there. Like you hop on a bad losing streak, and before you know it, your account could be gone. I think just taking breaks from trading was good. It was good good on like the mental space. For the most part, though, I mean, with mindset, I was always just kind of focused, and I was committed from day one. I was like, this has got to be it. Like, not like this has to be it, but you know what really did me in was when I joined IML. I joined with, like I said, my buddy who got me in on it, and then this girl, and we had these. He like showed us how to fund these like Hugo's Way accounts, and we all threw in like $200. It was like, looking back, it was like gambling. Like, we had no clue what we were doing. This was the first day we signed up, and I just remember like watching. I got in something. I ended up losing like $3. Like just like hitting buttons just to see what this was. And I remember watching like the girl. She got in on Dow Jones US 30 with literally the smallest like lot size you could on MetaTrader, and like I don't know how she just got in at the perfect time, and it just boom ran right up, and she made like $150 off it. And I was like,
oh, seriously.
How did I just lose to, you know? So like, I kind of took that as like, wow, that's like a shot. Like, you know, like she's better than me. Like, which, you know, it's all fun and games. But then I was like, all right, like the way I felt was like, she took my money. You know, like she was right, I was wrong. Like my money went to her account, right? So like that was kind of like, all right, let me kind of like understand what I'm doing. And then, like I said, just over the years, just the progression in who I was learning from, how I was learning it, all just aligned right, and it just made sense because it was like looking back, like, you know, it started off with me just, I almost didn't even need candlesticks in my chart to trade. It was just all lines and, you know, crossovers and this and that, and then it slowly just got less and less, and then the last things I ever had on my chart was just a MACD crossover, and then I was like, I don't need this, and I was able to kick that off. And I use indicators now like ICT, ones that people make that highlight like times of the day, stuff like that, just for when I back test. It makes it much easier. But yeah, I don't keep like anything on my chart. None of that stuff's needed.
Now, what about like if there was one thing you recommend somebody go away and master for the next month, what would it be?
That's a good one. So I would probably say, go look at one candlestick and how it evolves. I would say that's a huge foundation. Just look at the internals of one candlestick. So like, what I mean by that is like, if you were to go, don't do it on a daily, do it like, I think a 60 minutes fair. Even 15, 30-minute candlestick, kind of right in that range. Go on one and just highlight the open, high, low, close. Like that realistically is the foundation of how you're going to get close to the algorithm. Like you could, like I said, we talked about this already. You go on any time frame and it'll all look the same. You can't tell what time frame you're on. So when you're on a 60-minute chart, you're seeing every candle, almost every candle has an open, high, low, and close. It has its own range within that interval of time. Like there's no candle that's hardly ever you're ever going to see a candle that's like opens right up and closes at the like flat prices, and there's not, you know, a little higher, a little low here or there. Like you rarely ever see that. So go study one candle, watch how it just watch how it uses that opening price. Watch how it like forms a low and then, you know, trades back to the opening price, and then study all, you know, how quickly it runs after that opening price. Like just look at the internals of like one candlestick and start to get familiar with what a 60-minute candle looks like on a 15-second or 1-minute chart. I think like I said, the biggest thing here is just like the practicality of the market, being able to see one candlestick and how it looks on a 15-second chart, and being able to say like, okay, this whole series of, you know, repetition of numbers all just create this one singular candle on a 60-minute chart. And then, like I said, you start getting good at that. You put two next to each other, and now you could unlock an amazing thing in the ICT space that's not really talked about. So
brilliant. Just on that, I mean, I've actually before had a mentor go, right, we're going to do a tick chart strategy, right? So tick chart, you think, I'd never used one before. Anyway, we worked out that his tick chart was different than my tick chart, even though it was the same market, but the tick bar or candle started at a different time. So because there's no like sort of time limit, there's no time on a tick chart, it's just ticks. All my candles were different than his, but price obviously moved in the same direction. But then the weird thing was the strategy actually worked exactly the same on my tick chart as it did on his, albeit he was getting different entries and different times of the day that I was getting. So it was like to the fractalness of price. That's the purest example, because a tick chart is literally just being moved by ticks. There's no price in it whatsoever. There's no time in it whatsoever. So anyway, without further ado, we're going to wrap this baby up. It's been awesome having you on, Hunter.
Awesome.
What's the best way for traders to get hold of you?
Yeah, so you guys could all look me up on Twitter, Instagram, YouTube is a little slow right now. I'm trying to get into that, start getting videos of my trades and executions on there, but it's at the Hunter Setup, capital T, capital H, capital S. And
Brilliant. Well,
yeah,
look, what we'll do, folks, is we will hook that up. We'll put it as the Hunter setup in the show notes on Trading Nut. So if you're over there on tradingnut.com, search for Hunter setup. You're probably going to find him there. If you're on the video or podcast, then check the link in the description of that. Will take you to that page with all those links. Until next time, I wish all my listeners trading happiness and success.